Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Helt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Kim Flynn, and Kim is the president of XA Investments. Welcome, Kim.
Thank you, Gary, for having me.
So Kim, give us your background. What did you do before you started as president of XA?
Well, let's see. I am from Oklahoma originally, so living in Chicago the last 25 years, I started my career out of Notre Dame in investment banking, and I realized that wasn't really conducive to having a family and living a happy life. And so, for me, I found a career in asset management, and like a lot of people, tried my hat at a few different things. I did equity research for a while. And then I got into the practice of building investment products, which is a lot of fun because as both a finance professional as an investor, you get to learn a lot about the capital markets and a lot of different asset classes. And eventually I decided to leave the sort of safe environment of Nuveen Investments, which is a very large asset manager here in Chicago, and decided to found my own business and really have been on that entrepreneurial sort of venture pathway for the last 9 years.
Great. Um, Sounds pretty cool being able to build your own investment products.
It is. I mean, partly because you've got to get the timing right. Not everything is top of mind for investors. And so to build one of these, it takes you still a good 6 months to get through the legal and the SEC regulatory process. So you've got to be good at anticipating where markets are headed and anticipating where the demand is going to be, especially if you're trying to innovate and create cutting edge products in alternative investments, which is where we're focused. And so, the world, I don't know that the world needs another large cap ETF. So we've got to be thoughtful about what we bring to market.
Now, when you're talking about that you're building these products in alternative investments, can you give us a little bit more definition of what you consider that?
Sure. So alternative investments is kind of a funny label because I think it's probably easier to understand the extent of what might be considered an alternative if you think about everything that you could invest in the private markets, be it private equity or private real estate. It captures anything that's not a stock or a bond. So some people would say it includes cryptocurrency because that's not a stock or a bond. And so there's a lot of demand for product from what are largely institutional asset managers who've been running private funds. And that could be a private equity manager, infrastructure manager, you name it. We've worked with farmland managers, anything that's not a stock or bond. And the reason that's helpful for investors is you can get a lot of benefits like diversification, incremental income, inflation protection, things that you might not be getting from an all stock portfolio or all fixed income portfolio. And so it's just a way to save for retirement or save for an investment goal that could enhance returns and potentially reduce risk.
So in these alternative investments and stuff, how does someone go about getting involved in that? Because I think a lot of people probably don't even know what the alternative investments are and how can they even get to them.
Yeah, I think investors have had access, to real estate investing, I think for, multiple decades. And if you think about opportunities in real estate, it's actually one where for many investors who are homeowners, they understand a thing or two about buying a home or buying a second home for, income purposes. And so real estate is one of those alternative assets that tends to be a gateway to other types of alternatives, right? Because it gives you some comfort. Real estate is a tangible asset. You can see the building, you can see the property. And from there, though, the way to get access, it used to be that you had to have enough money to or meet suitability requirements to buy a private fund. And then you had to deal with a K-1 tax form, and it sometimes comes late and it's a pain. What's changed in the last 5 years is that there are now SEC registered products similar to a mutual fund or an ETF, in the sense that they're collectively held, and a type of SEC registered fund that holds alternatives is called an interval fund. And the interval is just speaking to the liquidity window, because many of these products, what's popular right now is private credit. A lot of investors want access to direct lending or asset-backed lending, which tends to have higher yields than what you could get from a high yield portfolio or a loan portfolio in a mutual fund. And so I think the reason that the SEC registered part is helpful is that you get the same protections of other registered funds. You have a board that protects shareholders. It comes to you in the form of a 1099, not a K-1. And so this interval fund market is still young. There's about 270 different private market strategies that are available in this wrapper, but it's really opened up a world of investing. And to buy an interval fund, you do have to have a wealth manager or a financial advisor help you with that. We're not at the point where people can just go on to Fidelity or Schwab and buy it directly. You still do have to have a financial advisor. I think part of the reason for that, even though the suitability restrictions have come way down, and now to buy a direct lending interval fund, you don't have to be an accredited investor. You don't have to be a qualified client. Um, I think that the broker-dealer firms that distribute these products, they still want to make sure that there's enough education, there's enough, conversation about the risks, because you may be able to buy an infrastructure fund, for example, but your time horizon should be appropriate because the liquidity is going to be limited. If you go into a long duration asset like infrastructure that's got a 10 or a 15-year investment window, these interval funds offer some periodic liquidity, but the practical reality is that you're not going to be able to get in and out of an interval fund the same way you might with an ETF, right? And I think plenty of investors like liquidity, and they prize liquidity over any other investment factor. So it's one of those trade-offs that people have to think about when you're investing in the private markets.
Now, you said that you have to go to a wealth manager or financial advisor. You can't go to I'm going to
That's right.
call it your do it yourself type thing. How would one know if the wealth advisor or financial advisor really understands the interval funds? Because it sounds like that's kind of a little bit of a specialty, and not everybody is going to understand them.
I think you're right, and I think that clients can ask their advisor a few questions about, like, I'm concerned about right now, there's a lot of volatility in the equity market, and I'm looking for things to diversify my portfolio. Maybe I'm approaching retirement and I'm looking for other sources of income to protect the portfolio. So I think it's basic inquiry. You've got to ask a few questions about what else do you offer? What else could I be invested in? Do you have any private markets exposure? I think that, Gary, this question is going to come up more and more because
Yeah.
investors are reading about it, every day, which is, you see SpaceX on the news, you see these unicorn companies that are massive, but they're still private. They haven't gone public, and more companies staying private longer. That opportunity, looking to access some of those opportunities, you can do that. There are funds in the interval fund market that invest in those unicorns in the private state, which is what you want, because a lot of that growth is happening for those companies before they go public, and so you don't want to miss out on that part of the growth curve. So I think that as you're hearing about things on CNN or Fox News, I think asking your financial advisor, like, how do I participate in some of that growth earlier on? And that'll open up a whole conversation about other types of alternatives like infrastructure or farmland investing, if those things are of interest to you. And like, they're all going to have different benefits, different risks. Um, in the last 2 years, because we've all been dealing with higher prices and inflation, real assets, things like infrastructure and farmland have really been nice because they provide not only attractive income, but they are inflation protected because they often adjust and the prices move higher with inflation. So there's things, that you'll be hearing about in the news, or just as you go to the grocery store and you see prices being higher, have that conversation with your advisor, because it might be an opportunity for you to invest according to your beliefs and what you're seeing, what you're facing day to day.
So is there a particular place if somebody wants to learn more about the interval funds? Is there a particular, document or place that you would recommend for them to go to read up on this?
Yes. So my firm, our website is xainvestments.com. We've got a number of educational resources for both advisors and investors on our website. We actually launched last week an index that tracks the interval fund marketplace. So there's information about that index. The index is INTVL, and we've got some education on the market and on the structure itself. So that's a good place to look. There's a lot of reputable firms, the leading alternative investment managers, KKR, Ares, Apollo, Blackstone, Brookfield. All of these managers have now multiple funds that they offer in the interval fund market. So you can also find information if there is a preferred partner or asset manager that you follow. Just type in interval fund on their website, and you'll get to see what funds they offer.
Now, as small business owners, how can we, start to incorporate that into our businesses?
Well, I mean, I think that from a small business owner perspective, I think that they've got a better handle than most investors on the reason to diversify away from large cap Mag 7 equities, right? In terms of the risk that you take on with equity market volatility. And, depending on your time horizon, as a business owner, you may have a business objective in mind that investing in stocks and bonds alone wouldn't satisfy the return objective that you have for the business. And so this is a way to invest alongside other sophisticated institutional investors. The largest pension funds and endowments have been investing in private markets. And it's just, I think that this is what the American business owner needs, is an opportunity to deploy capital in a more sophisticated way, but have it be convenient for them, right? Have it be easy. You need to be able to buy and sell easily. You want a 1099 and not a K1. And so I think that the industry, now clearly there are business motivations why these alternative firms who are leading the way. The the uh the thing that they probably don't really talk about is that institutional pools, because none of us have pensions anymore, we all have to save for our retirement. And if you're a small business owner, you're mindful of the employees and their retirement goals. And because we don't have pensions, we all have to save for retirement, and we don't necessarily have the tools that some of these sophisticated pension fund managers have. And this is a way to level that playing field. If you have an investment goal that's 10 or 20 years out, so you can take a longer perspective, investing in private markets may be appropriate for you. And that's how you pick up incremental return and benefit from some of the tools that those institutions have long taken advantage of. So it's just now that the individual investor market, these options had not been available in the past, but it's still an early part of the evolution. There's a lot more alternative managers who see this retail investment opportunity because the capital is flowing to retail investor hands. Right? Institutional capital pools are shrinking. And so there's a lot of firms that want the attention of the small business owner, that's for sure.
Yeah. Now, earlier you talked about the liquidity events and things like that with these the interval funds. Can you explain that?
Yes. So an interval fund is a evergreen product. It's semi-liquid, meaning you might be able to purchase it on a daily basis if the fund has a daily NAV, net asset value. Um, and a private credit fund is a good example. That's the largest part of the market because there's so much demand for private credit right now. You could buy that fund any given day that you want to buy the fund. But when you want liquidity, the exit is going to be a quarterly exit. So with a mutual fund, I think people are accustomed to buying any certain day they want and selling any certain day they want. So it does have to be planned. The interval funds typically have a quarterly set timetable in advance, and there's 5% of the net assets of the fund that are offered and ready to be liquidated depending on which investors want out at that quarterly window. So now if we look back in time and think about like April of 2020 in COVID, um, if the quarterly redemption window was April of 2020, you might have had a lot of people ready and standing in line saying, "Hey, I want liquidity." And if that happens, if there's more demand for liquidity than the 5% of net assets, then shareholders would get prorated. Now, you're not going to be happy if you've been prorated because maybe you get 1% of what you asked for or 10% of what you asked for. It just depends on how many people want liquidity. So that's why you do have to have a longer investment horizon because investors are all able to put in requests for liquidity at that quarterly window, but it may not be filled the first quarter. You may have to roll to the second quarter. So, for planning purposes or rebalancing purposes, that's a big difference between a mutual fund, right? So, um, but it is an improvement if you think about if I buy a private fund and the private fund has a 10-year term, I can only get liquidity at termination, right? I can't get liquidity between year one and year 10. And so what the industry has tried to do is provide um, interim liquidity so that people can, move things around, but that's going to work in a normal market environment. To the extent that you're doing your rebalancing in a dislocated market, then that will be challenging on that rebalance.
So if I'm hearing you right, when you're talking about, the private stuff, that's where people would have been getting their K1s. And so they buy in and then they basically have to hold that until term and whatever happens, happens.
That's
Where
right.
you're saying with these interval funds, you're still doing the same thing, but you're getting the 1099, but you have some times that you may be able to get out depending on what the liquidity is.
That's right. So I think the desire is that people wanted the ability to have interim liquidity because they might have more than one private investment strategy. And so with a private fund with a 10-year term, you're really locked up that whole time and
Right.
you've got no liquidity. And so I think that it's a marginal improvement to have some periodic liquidity. And in a normal market environment, you could probably sell out of your entire position at that quarter end. And the interval funds, with the exception of real estate, because as you know, the last 2 or 3 years has been challenging for REITs, real estate private funds, and real estate interval funds. And so those funds have had they've been able to give people liquidity, but there's been a lot of demand for liquidity. And so there's been basically people kind of waiting a couple quarters to get out, which is like I said, not great, but it is better than having to wait 10 years.
Yeah. And I
Yeah.
will tell you, from someone preparing taxes that constantly waiting on those K-1s, this does make an individual's life a heck of a lot easier by just getting that 1099, as compared to waiting for that K-1, because lots of times they don't know when it's coming. They don't know how much is going to be reported on it. So it's definitely stressful for some people.
Yes. Yeah. I mean, you almost have to file an extension for your taxes because you're probably not going to get everything by April 15th. And so, I think, with technology and everybody, everything's moving so quickly, we want things to be a bit more seamless. And so I think interval funds are an improvement on investing in private funds. Because of suitability restrictions, because of K-1s, it really just meant that a lot of individual investors, it wasn't a good fit for them to buy private funds. It wasn't appropriate with, if you have, you know, $2 million, you're probably sitting in mostly mutual funds or ETFs. And now there's an opportunity for you, and so it's a way to improve your retirement goals to save differently. And it opens it up to a lot of individuals and mass affluent investors that didn't have any of these options before. I think the wealthiest of Americans, they've got plenty of tax advice and investment advisors, and they're all investing in private funds. But that's not really who we're talking about in terms of who's going to benefit from opening up private market access.
All right, Kim, we've covered a lot of stuff, and I mean, this is, good stuff, and I'm sure a lot of our listeners that have never heard of this are excited because this gives them another place to invest. Um, what have I not asked you wish I had?
Well, I think you could ask me, what are the most interesting alternative investments for 2025, kind of the environment that we find ourselves in.
Tell us.
Okay. Well, so there's a lot of, I think, because and I think small business owners would relate to this because banks aren't lending the way they used to. It's created a huge gap in terms of um, who is providing loans to business owners, and so the direct lending market is just grown terrifically. The interval fund market leader is a firm called Cliffwater, and they have the largest fund in the marketplace, and they are. It's a direct lending fund, and the yield on that portfolio is anywhere from 9 to 11%. It's a floating rate investment, and I think that what's interesting about direct lending is, you know, uh, a BlackRock, who's the world's largest asset manager, just acquired a firm called HPS, which is about 120 billion direct lender. So direct lending is something that I think that a lot of retirees or business owners who are focused on income production should be taking a look at, because I don't think there's any signs that direct lending, that this powerful engine of all these lenders who have filled the gap that banks left behind. Um, and so direct lending is an interesting opportunity for investors. It's also an alternative way for business owners to get loans, because there are a lot of outfits that are making small and medium business loans that also fall under the direct lending category. Some of them might be the smaller the business, that would be called like lower middle market direct lending. But it's a nice alternative for a business owner to issue debt as opposed to diluting their equity. So I think for business owners, take a look at the direct lending part of the market. Like I said, it's attracted a ton of capital in the last 3 years. And with the likes of BlackRock moving into direct lending, I think we're going to hear a lot more about that opportunity because it is more attractive than high yield. Um, and it's more attractive than a lot of fixed income opportunities in the market.
Great. Appreciate that. So, Kim, if people want to reach out to you or to your team to talk about this, how can they reach you guys?
Absolutely. Our follow me on LinkedIn. I'm Kimberly Flynn at XA Investments. We post educational information probably about 3 or 4 times a week on LinkedIn. So you'll learn a lot about the interval fund market, or you can come to our website at xainvestments.com. We've got white papers and we've got information on that interval fund index. So you can learn a lot more there.
Great. Really appreciate your time today. I know I learned a lot from you today, and I'm sure our listeners did too. So I appreciate your time.
Thank you, Gary.
Yes. This week, my guest was Kim Flynn, who is the president of XA Investments. I'll see you guys next week.